Hello everyone. Now that we have analyzed our business transactions and identified the accounting components involved, it is time to bring those numbers to life. Let us now post them in Excel to understand better how the transactions flow through the three financial statements. I have already set up a pro forma version of each statement in Excel, and I have pre-filled some of the accounting components into their respective places on the income statement and balance sheet. You can pause the video here to take a closer look at these partially filled templates. You will notice that the cash flow statement is neatly split into three sections: operating, investing, and financing activities. The net balance of this statement flows directly into the cash balance on the balance sheet. To make life easier, I have color coded the Excel cells to help you visually track which numbers are linked across the statements. In the income statement, once we have entered all income and expenditures, we compute the taxes payable. The profit after tax is then carried over to the balance sheet under reserves and surplus on the equity side. These two cells are also color coded to show their connection. Some cells also use formulas. Don't worry, they are simple and useful. The Excel file is available to download via the link in the video description, so you can follow along or try it yourself later. Now, before we begin posting the transactions, keep in mind that after each transaction, the balance sheet must balance. That is the golden rule. However, here is a twist. If you enter 200 instead of 2000, the balance sheet might still balance, but your numbers will be way off. Trust me, spotting and fixing such errors later can be a real accounting treasure hunt, but without the treasure, of course. Another quick note, this isn't the standard way of recording accounting transactions. Ideally, we would go through the traditional route, which is journal, ledger, trial balance, and final accounts. But this Excel-based method is a fantastic learning tool to grasp the flow and the final impact of transactions on the financial statements. So we leave the journal, ledger, trial balance marathon to the professional accountants and take the express route with Excel to understand the bigger picture. The major drawback of this method is that Excel does not store dates or maintain transaction histories the way softwares like Tally or SAP does. In those systems, you simply post a journal entry and the software takes care of the rest. Plus, you can easily trace or filter transactions by date whenever needed. So let's pose the first transaction. Anita plans to start a business by investing 30,000 from her savings. So here the business is getting capital or equity. Now, whenever we are entering any amount in the balance sheet or in the profit and loss account, we will always start by putting an equal to sign. So equal to 30,000. Now, raising money in the form of equity is a part of financing activity. So let us write it over here. Capital invested 30,000. Now, as you can see, we have completed posting this transaction and the balance sheet is tallying on both the sides. So let's go to transaction number 2. She decides to borrow 20,000 more from the bank at 6% interest that will be paid later. So loan taken is a liability. We have taken a bank loan of 20,000. So equal to 20,000 on the long-term liability side. Again, raising money in the form of debt is also a part of financing activity. So here I will write loan taken 20,000. As you can see again, the balance sheet is tally. Now, after you post each and every transaction, you should see to it that the balance sheet figures are tallying on both the equity liability sides and the asset side. If it is not tallying, then that means either you have done something wrong or you have missed posting an element in the financial statements. So let's go to transaction number 3. So she decides to construct a shop. Cost for that is going to be 25,000. 15,000 will be paid today. Balance will be paid soon. So value of the shop is equal to 25,000. We have paid 15,000. So it's a part of investing activity. I will write it over here. Now I'll put in a space bar Then I'll put a hyphen. The hyphen shows that it's a minus sign. Money is going out. So I'll write payment for shop. So here we'll put minus 15,000. Then we will pay the remaining amount later on. So I'm taking it as a long-term liability, and under shop payables, I'll type equal to 10,000. Next transaction. She decides to buy a pickup truck for 5,000. So truck, the cost is equal to 5,000. Again, it's a part of investing activity. Payment for truck minus 5,000. Next transaction. She places her first order of fruits and vegetables worth 20,000. 50% is paid now. Balance will be paid after 30 days. So she is buying inventory. The value of the inventory is equal to 20,000. She has paid 10,000 for it. Buying inventory is a part of core operating activities. So I will write it cash flow from operations. I'll put a space bar. I'll put a minus sign. Then I'll write payment for inventory. Minus 10,000. And balance will be paid after some time. So I'll take it as a current liability because it will be paid after 30 days. Here I'll type equal to 10,000. Okay. So balance sheet is tallying. We are doing it right. She hires a helper, pays him a monthly salary of 2,000. So salary is an expense. An expense we'll put a minus sign. So equal to minus 2,000. As you can see, this is the only expense. We don't have any income. So that's why it's showing as a negative profit. And it is taken over here, minus 2,000. That's absolutely fine. No need to worry about it. We have paid the salary. It's a part of operating activities. So I'll type it over here. Payment of salary and minus 2,000. So next transaction. Utility and fuel bill for the month is 1,000. So fuel and utilities equal to minus 1,000. And it's a part of operating activities. Fuel and utility bills minus 1,000. From our inventory, goods worth 15,000 are sold for 30,000 cash. So let us record the revenue or the sales first, equal to 30,000. These are cash sales, so it's a part of operating activity. I'll write over here cash sales 30,000. From the inventory, we are selling goods worth 15,000. So we'll go to inventory, we'll do a double click and we'll type minus 15,000. So now we have 5,000 worth of inventory remaining. Inventory sold is a part of COGS, so equal to minus 15,000. So the balance sheet is tallying after posting these transactions. Next, goods worth 2,500 are sold on credit for 5,000 and payment will be collected after 7 days. So these are credit sales. So we are making more sales. So I'll type plus 5,000. Now these are sold on credit. So we have receivables worth 5,000. Then from the inventory, we are selling goods worth 2,500. So minus 2,500. And it's a part of COGS. So in COGS again, minus 2,500. So now we have inventory balance of 2,500 and we have receivables of 5,000. Next transaction. Anita decides to pay the interest on loan taken on a monthly basis. So let's do the calculation over here. Interest equal to minus. She has taken a loan of 20,000. Multiply by the rate is 6%, so 0.06. This is for the entire year, so divided by 12. And the interest amount is 100. Now, paying interest can be recorded as operating activities or financing activity. I will record it under operating activities over here. So, spacebar minus interest pay minus 100. Next, 3,000 from debtors are collected. So, let's go to receivables. 5,000 is the balance. We are collecting 3,000. So, minus 3,000. Cash is coming in because they are paying us. I will write over here collection from debtors 3,000. So now we are yet to receive only 2,000, 3,000 they have already paid. Next transaction. Depreciation for the truck and the shop interiors are 500. Now we'll reduce 500 from our fixed assets as depreciation. This is known as accumulated depreciation on the balance sheet. So minus 500. We now have net fixed assets worth 29,500. The depreciation for the current year is also an expense. So we will record it in the profit and loss account minus 500. Next transaction. Tax of 20% is paid on profits. So now we are done with all the transactions. We have recorded all the expenditure. The profit before tax is calculated. It is gross profit and we have reduced all the expenses. So now let's calculate the tax. Tax is equal to minus 0.2 is 20%. So 0.2 multiplied by, we will select this. So we have to pay taxes of 2780. Paying taxes is a part of operating activities. So I will write it over here. Spacebar minus taxes paid minus 2780. So that's it. We have recorded all the transactions. Our net profit is 11,120. It is taken to the balance sheet owner's equity side, reserves and surplus. Over here it is shown as profit earned during the year. Balance sheet is tallying on both the sides. We have a cash balance of 47,120. So this is how we record the financial transactions in the three statements, and this is how the three statements are interlinked to each other. In the next video, I will show you how to calculate the cash flow from operations under the indirect method. So see you in the next video.